Welcome back to the Star Carter Personal Finance Show. If this is your first time joining me, I am Star Carter, and on this channel, we talk personal finance. So I'm glad that you guys have joined me today for this Navy Federal Secured Card update video. The original video that I did was back in July of 2023. So almost 3 years later, we got some changes to the secured card from when I did the original video. So we're going to talk about that today. We also are going to talk about ways that you can graduate your card on time instead of having to wait all the way up to a year or even more for some people. So we're going to talk about all that today. Make sure you do all the things like, subscribe, share. If you can hype the video up, do all the things that helps this video stay relevant in the algorithm. I really do appreciate it. So let's get into today's content. So when I originally did this video going on, like I said, 3 years now, you can see it right here in the corner where it says secured credit card over here. I guess it might be on your right or either your left, depending on how this look on your screen. But it says why graduation isn't coming, top reasons your Navy Federal secured card isn't graduating. So the card used to be blue. It used to be called the N Rewards card. And since then, there has been some changes to the card that I really do like. So let's look at those together. So since April of 2025, the N Rewards used to be the Navy Federal Secured Card has gotten a facelift, and now it is the Cash Rewards Secured Credit Card for Navy Federal. I really do like this for Navy Fed because with the N Rewards card, you had to graduate that card to the Cash Rewards card, but now they're already starting out with the Cash Rewards card as their secure credit card. So therefore, when you graduate, you would just be graduating the same card, but with a different reward. So because I think the regular Cash Reward card is 1.5% cash back, and this one is 1% cash back. The N Rewards card was a 1x points back. So this one will give you the 1% cash back, which I really do like for a secure card. A lot of secure cards do not come with any type of rewards. Most of them have really trash annual fees and other type of fees like Credit One cards and some of the other terrible cards that I talked about on the channel. If you want a list of those terrible cards that I talked about, I will link that video. Some of the worst cards you can use to rebuild or build your credit. So this is one of the cards that I do recommend if you are a Navy Federal Credit Union member. You have to be a member of this credit union. Or if you are able to join the credit union by either military affiliation, family, whatever. So if you're able to join this wonderful credit union, I would say this is one that you do not want to fumble the bag on. I would say you don't want to fumble the bag on any financial institution, but Navy Federal is known for giving really high, generous limits on their credit cards, car loans, and personal loans, and so on and so forth. So they are a very large credit union. I want to say they are the largest credit union in the world, and they are located all over because they serve the military families, also DOD, and some of the other ways that you can join this credit union. But it is one of the top tier credit unions. I'm not going to say it is the best and like the all be all, because there are a lot of great credit unions. You just have to do your research. But I would say that if you are in the process of building or even rebuilding your credit from past mistakes, I will always say to make sure that you are a credit union member somewhere. And at that credit union, you want to make sure that they, excuse me, that they do offer some type of secured credit card option. And if they don't have a secure credit card option, I would opt to say get the secure loan. Some people call it a pledge loan. Now, if you're new and don't know what a secure credit card is, or even a secure loan, basically what it is, you're putting up your own money to secure the limit, or you're putting up your own money that you're borrowing against your own money if it's a loan. So that's what you're doing when you are securing a loan or securing a credit card. You're using your own money for the limit. In exchange, they're going to give you this credit product that you may or may not automatically qualify for unsecured, because either you're starting your credit for the first time and you don't have any history for them to go off of, Or if you're rebuilding your credit, you may have had some terrible collections, bankruptcies, all kind of different things, judgments, stuff that can tear your credit up, right? And you may have already moved away from those type of events, and now you are ready to start rebuilding your credit. And so again, credit unions are one of the best ways to do this. Okay. I don't want you going out trying to do the Kickstarter and all these different savings accounts where where you building up some type of loan and all. You don't have to do all that jazz. What you really need to do is get you a good financial institution, preferably a credit union. I've said this the whole time I've been on this channel, going on 4 years. Credit unions are where you want to go when you are trying to establish or reestablish your credit, because they are for the members. They are member-owned, not-for-profit entities. Now, I will link a video that talks more about credit unions if you're not really familiar with them and some of the ways that you can join. There's a lot of different ways that you can join credit unions. You can join credit unions through work. Some of them have what they call a community charter, where you can join just because you live in a particular radius of the credit union, or you go to school in that community, or you go to church in that community, worship in that community. You may have family members. Okay, it's a lot of different ways you could join credit unions. There are also things like the the American Association, and and if I wasn't trying to do the video, I'd probably just pop them right off at you. But I'll link that information in the description box, and also link that video for ways that you can join many credit unions. Some of them, like I was just saying about like the American Association, stuff like that. All you got to do is pay like a membership fee to that website. Or some credit unions, you could just pay into their foundation if you're not a part of their community, or if you're not a part of their work group that caters to that particular credit union. There are ways that you can join some of the really top tier credit unions that are in the United States. So I would say make sure that you look into those options first before you start doing the alternatives that are really not good. And I always say this too before I move on and give you some more highlights on this credit card, that we want to think about, excuse me, y'all. We want to always think about quality over quantity. When we're talking about credit, we want to think about quality over quantity when it comes to our credit, because you can have a ton of accounts, and if they are trash accounts that makes your credit report look risky, then you are doing yourself a disservice having them on your credit report. When you are building or rebuilding your credit report, that's why it's so important to start with financial institutions that can possibly be able to give you your first car loan if you are a younger person trying to rebuild a credit, okay? Or somebody that has a rebuild their credit or build their credit. If you're rebuilding your credit, this is the ways you want to go, especially if you had trouble in the past. You want a clean slate, and credit unions are really good about looking at the overall picture before making a credit decision. It may not always come down to just the FICO score. It could be that they're looking at what is your relationship with the credit union and all those types of things that go into it. So you just want to make sure that you start with these. So we're looking at quality credit products, because what I told you in my Credit Clarity Tuesday, which is the Clarity Credit Tuesday video, what I told you before is you do not want to look risky, because that's what credit is all about, not looking risky. So when you look risky, that's when they say, nope, that's when you keep getting denied. That's when you keep getting denied if you look risky. So you want your credit report to look stellar, the best it can, even when you're building and rebuilding your credit. It's very important that you do that. So let's get into some of the things that makes up this secure credit card with Navy Federal. So we got the bill credit, earn unlimited 1% cash back. As I told you guys, that is awesome. Most of these secure cards do not give you any type of cash back. I love this for them. This is awesome. The initial deposit is as low as $200, but I'm going to tell you this. Now we're in 2026 and the rules are changing, and the rules are changing because lending is getting tighter. Okay. Lending is getting tighter. And when lending is getting tighter, that means that they will not approve some of the ones that they may approve a year or two or three ago, because credit card delinquencies is through the roof. A lot of people are living off their cards because of inflation, income gaps, you name it. People are using their credit cards more often than they have in the past. Therefore, credit card delinquencies are in the trillion now. All right. And I think that became a thing maybe in 2023, and it's steady climbing up, steady climbing up. So that doesn't seem like it's going to change. So therefore, these credit card companies will tighten down, even the secured cards. Okay. So again, you want your credit report to look as excellent as you can. If you don't have anything on it and you got a clean slate, that's even better. But if you are rebuilding your credit, then you want to make sure that you have the cleanest slate that you can before you even start applying. So with that being said, initial deposit as low as $200. I would say do not apply for this card unless you got $500, at least $500 that you can put up as your initial secured deposit to secure the limit on this card. And that's because when this card graduates, it will put you at a higher limit starting out. I see a lot of people when they do the 2000, when they do the 200, they get increased into 2000. Okay. Excuse me. They get a 2000 limit. You want a limit that is going to help your credit, because you're not going to be that close to utilization. Okay. That is one of the main things when it comes to credit cards, especially if you are rebuilding your credit. Some people say, well, utilization doesn't matter as long as you are paying the card back off every month. It just depends where you are on your credit journey. So that could be true and that can be false. It just depends on where you are. So the more limit that you are able to put on your credit card, the more room you have to be away from maxing the card out and also being over the 30% credit utilization. That helps maximize your score and not make you look risky and not make you look like you are living off your card. Because the closer you get to maxing it out to 100%, you look risky. You look like you might be living off your card. You look like you might be struggling with your income. That is how they read that on a credit report. So if you are somebody like me that has a credit score and a FICO that is pushing 800 or over 800, depending on which credit bureau you look at, I can play that game with them and not worry about if I max the card out and if I pay the statement completely back off and all that kind of jazz, because your credit score can dip. It can go up and down. You can lose some points and then you gain those points back. It's like a ping pong. You just rebound it back and forth, back and forth. You can do that when you have excellent credit, because it only going to take a dip for a little while if you was to let a maxed out card or over 30% card report to your credit report. But when you are trying to build or when you're trying to rebuild to get unsecured things, that's not what you want to do. Okay, that's not what you want to do. I would say never let your card report maxed out on your credit report, even if you got good credit as mine, because you never want to look risky to the actual credit card company. They might think, okay, she's had good credit all this time, but now she's maxed out the card. This is unusual for her. So, what's going on? And it could, decrease your actual unsecured limit. If you got an unsecured card, they could decrease your limit if they think that you are in financial trouble. So I would never say really max the card out, and definitely do not let it report on your statement to the credit bureaus. But I would say for initial deposit, you can go as low as 200, but I would tell you into 2026, you want this card to graduate with a very good credit limit, I would say start this card off with at least 500, and you can put it all the way up to 5,000 on this card as a secure option. Okay, so think about it like that. All right, some more of the things. So after 3 months, account review to determine eligibility for a credit limit increase, the credit line increase, same thing. Okay, so what that means is now you're not graduated at this state at the 3-month mark, 90 days. You have not graduated at this particular junction. What they're saying is, on top of your secured deposit, they can actually give you more. So that's why I'm telling you to start off with more than $200. Okay. So possibly if they give you more, it could be 1,000, which make your limit be like 1,500, or it could be 2,000. Well, it makes your limit like 2,500. But the higher you can start over here can help you when it comes over here, when it's time for them to give you a line just to see how you do. So this is the test. In the first 90 days, they want to see how you do, how risky, how you're going to use your card, what are your habits. And they may adjust depending on that, okay, to give you more or not give you any at all. Okay, so they're looking at what you got going on in your first 90 days. This is not a new concept. When you start a job, they try you out for the first 90 days. You know, they do you a 90-day evaluation. It's the same thing they're going to do with 3 months. They're going to do a 90-day evaluation to see, okay, is this person credit worthy enough for us to give them more money on top of what they've already secured? Okay, we're not giving them their deposit back just yet, but we just want to see if they are credit worthy of getting some more money that is unsecured. So you got a part that's secured with your money and a part that's secured with their money. And combined, you got a better credit limit, right? Now, if the 3-month, 90-day period comes up and they don't do that, then you know you got to work on some things. That's all that means, okay? Next thing is they say 6 months over here, 6-month account review to determine eligibility for an unsecured cash rewards credit card. So once you get to the 6-month mark, then they're going to look at, okay, did we increase them at the 3-month mark? And if we did, let's see how they did with that money all the way up to now in the 6-month mark. And are we ready to take the training wheels off of this card completely? When they are releasing the security deposit that you put up, they are in a sense taking the training wheels off. Okay, are you ready for these training wheels to come off this card now and you enter the big leagues with this card? So that's where you want to go when you get any type of secure card. Now, I will give it to Navy Federal that they're giving you these increments along the way, 3 months, 6 months, because most secure cards do not even look at reevaluating you for at least a year. Okay? For at least a year. This is normal. A year of seeing how you do with the card is normal. What Navy Federal is doing is abnormal. That's not usually how it goes. It's usually a year. So that's why I say you don't want to fumble the bag on this one, because most credit unions, most banks that offer secure products want to see you using that secure product for at least a year before they take the guardrails off, okay? They take the training wheels off. So that's why it has to be perfect, okay? That's why it has to be perfect. There's no room for error in there, okay? No room for late payments, okay? If you have a problem with late payments, if you have a problem with keeping up with your bills, you need to set your stuff up on automatic pay and make sure that you have the money in your checking account, okay? You need to put it on your calendar, on your phone. We all got these smart devices. Uh-oh, I'm about to throw mine in the floor. We all got these smart devices, and majority of them comes with a calendar where you can set yourself a reminder on your calendar, and you can have that to reoccur every month to remind you when your credit cards and when your really important bills that report to your credit report or can report to your credit report if they become late or delinquent, to make sure that you're paying those things on time. Okay. There's no excuse in 2026 when we have credit card delinquency rates all the way up in the trillions that you are looking risky and thinking that you're going to graduate the card. No late payments. Okay. That's key. No late payments. Make sure that you are setting things up on auto pay to at least pay the minimum. You want to at least pay the minimum if you can't pay the full balance. Now, I would tell you this now. Do not ever spend more money than you can afford to pay back. That's how people get in trouble. That's how you get to the bankruptcy door, is when you're spending more money than you can afford to pay back. Living above your means, because a lot of people look at credit as their own money and it's not. You have to pay that money back. So that's how you get over leveraged, okay? So you want to make sure that whatever you purchase, that you are able to pay it back in full by the statement date. Okay, by the due date. Whenever it's due, you want to make sure that it's paid so you don't collect that late fee. But by the statement date, you want to make sure that it is under 30% so that you do not tear up your credit utilization, especially when you're trying to build or rebuild your credit. That's very important. Okay. Not only is it important to pay your cards off every month so that you don't pay interest, but you don't want to pay interest at a whopping 18%. Now, I will tell you this too, that 18% is really low for a secured credit card. And you will find this with a lot of credit unions that 18 is usually their cap. Not all, but a lot of credit unions, they cap their highest interest rate at 18%. That's why credit unions are a better option. If you go to places and get cards like Credit One Bank, Premier Bank, and some of the other terrible cards that I mentioned, I told you I was going to link that worst credit card video, you will see that a lot of those start over 30%, 39.99. I've seen some even high as 79.99% interest, okay, on balances that are being carried where you're not paying the card off completely. When you carry a balance, it looks like you're irresponsible with your credit, okay? It looks like you're living off your credit because why would you pay interest? I want you guys to look at credit logically and not being risky, okay? No risky business. So when you are carrying a balance, be mindful that the credit bureau doesn't know that you're carrying a balance. They don't know that. They have no idea. Your interest is not reported on your credit report. The credit card company, the Navy Federal, the credit union knows when you're paying them interest, and they're happy about that because that's income for them, okay? But that's unnecessary money coming out of your pocket, okay? So we never want to do that. We always want to charge what we can afford to pay back every single time. No excuses. That's where we at in 2026, okay? Another great thing about this card that you may not find in a lot of secured cards is, like I was telling you guys before, annual fees is sometimes normal on some of those really terrible worst secured credit cards that you can get. They may have an annual fee or some type of one-time setup fee, all kind of fees that they want to charge you, and then they've already maxed out the card with fees before you even get the card in your hand. Premier Bank, a lot of those do that, okay? So no annual fee, no foreign transaction fees, which that is great. So if you're traveling, you got to worry about any foreign transaction fees, and no cash advance fees. This is awesome, okay? Cash advance fees could be all the way up to 5%, okay? So I never say do cash advances if you don't have to, because they do start charging you interest day one versus purchases will give you the grace period to pay it by the statement. But cash advances start day one. So if you go to the ATM, take money off the card, you're going to start paying interest day one of you taking that money off the card as cash, okay? But at least they won't charge you a fee if you do that. But I do err against that because that looks risky. Whenever you're trying to take money off the card and you don't have the cash yourself, it looks risky. So don't do the cash advance, okay? Now, again, how it works, deposit at least $200, but you go up to $5,000 into your membership savings account, which everybody have to have a savings account in order to be a member. You're going to submit your application. If approved, they're going to hold your deposit as a security. The amount you deposit will be your credit spending limit. Okay, that's number two. Number three, after just 3 months, as we said before, you could be eligible for a credit limit increase. They will be adding this on top of your deposit for this, okay? So whether your credit limit is increased will depend on your current credit limit and other factors, okay? See, that's why I say that. Look here. Will they give you the extra money in 3 months? It will depend on your current credit limit and other factors. So a lot of you all that are starting off at $200 and not getting this credit limit increase after 3 months, that's probably why you got the bare minimum secured. That's why I say wait unless you can get up to 500. Other factors. What can those other factors be? Well, those other factors could be your credit utilization that we talked about, maxing out the card, looking like you're risky, okay? Doing cash advances off the card, those type of things. Not only that, but also they look at your overall credit history. So not just what you're doing with them, but what you're doing with everybody else. Okay. So if this is your first account and you're just building your credit, then they don't have anything to base off. So you got a clean slate. Okay. They don't know your dating history. Okay. They don't know what your dating history was with the other people. They only know what you are doing with them. Okay. But if you're rebuilding and you've had credit in the past, well, they're gonna look at and try to holler at your old flings over here and see what's going on. They're gonna look at your credit history. They're gonna look at those things. So when you are trying to rebuild your credit again, you want to start off with the most clean slate that you can. So if you got collections on your credit report, get those off of here before you try to get a secure card. Get those removed. Pay for delete. Do a settlement. Whatever you got to do to get those collections off of your credit report. Okay. If you had a late payment with somebody else, car payments on whatever you did a late payment on, stop doing it. If you got to increase your income, whatever you got to do so that you can afford to make your payments on time and in full without missing any payments. Okay. Like I said, no risky business on the credit report. Okay. Because that is what they're looking at. Okay, that's what they're looking at to see if you are worthy of them taking the training wheels off of your current card, off your current secure card. If they gave you a chance to get a secure card, excuse me, you want to make sure that you're doing all the things to make this card graduate so they can take the training wheels off so you can start building really good credit with the credit union. Okay. So you want to make sure that your other accounts look good as well. So if you had a late payment, and I talked about this, if you were going to rebuild your credit in 2026, I will link that video and I gave you some steps. First off, if you had late payments, you want to continue to not have late payments anymore. You want to make sure that you're paying on time all the time and do that for at least a year and then go to them in a year and say, hey, I had a slip up in 2025, but it's been a year now, it's 2026, and I have not had a late payment since. Do you do a goodwill and will you remove that late payment from my credit report? Some will, some won't, but you'll never know unless you try. Okay. So those are some of the things you can do there. All right. Next thing that they can be looking at, of course, like I said, they're going to look at your credit history. So no maxed out cards. You're going to work on any negatives. I got my notes down here. Okay. Another thing, I talked about earlier, quality over quantity. Okay. So if you guys got anything that's on your credit report that does not look good, that looks risky, let's talk about buy now, pay laters that might be on your credit report, Affirm, Klarna, all the ones. Okay. I don't have to name them all. You know what I'm talking about. Pay those things off. Pay them off. They're not quality credit options. They look like you're broke and it looks like you're paying for stuff that you really can't afford. That's what credit cards are for. Okay. You buy purchases with credit cards so you can earn points and so that you can pay those off by the statement. You don't need buy now, pay laters. You don't need a whole lot of little small increment installment loans that is eating up your check, that is flowing through your checking account and they're all on your statement. That screams I'm broke. That screams that I don't know how to handle my money. Or that screams I'm living above my means and I'm constantly using my future earnings to pay for stuff that I want now instead of saving for those things. Okay. So you don't want to look risky all the way around, even with your checking account. No overdrawn checking accounts, right? They got a thing called Oops, and I did a video on this a long time ago. It's like a optional overdraft protection that they have with Navy Federal. You should never use that. You should never, ever use that because that screams, I have financial trouble, because it's going to throw you in the negative. You're going to be in the negative with that. So your account is in the red. That never looks good. That don't look good for any financial institution because they're scared that you're not going to be able to bring that account back to current and they might have to charge that amount off. So you don't want to do that. It all matters. What's on your credit profile matters and what's not on your credit profile matters, especially when you are doing business with this bank or with this credit union in this case. So you want to make sure that you look great all the way around. Okay. So some things you may have to forego until you can afford it. And that's not nothing wrong with that, because at least you know if you buy it, you're buying it either outright with your cash, or maybe you're going to use your card so you can get the reward points and stuff like that. But you got the cash to pay that back off. Again, we're not living above our means, and we're not charging more than we can pay back. So if you got buy now, pay laters on your credit report, or if you got buy now, pay laters that are coming out of your checking account, pay those things off. Get rid of them, okay? They're not a good credit option. Again, I already told you guys to stop getting those starter accounts. Make sure that you're with a good credit union. And I will tell you this too. If you are trying to build or rebuild your credit, stay away from Capital One right now. Okay, Capital One is the one that you do not want to get Capital One secured cards or any type of their cards when your credit is not good, or if you're building your credit. I don't care if they offer credit builder cards. They are the ones that will put you in a credit bucket when you join them or apply with them and you're not at 700, at least 680, at least. Okay. So you do not want to apply with them until you at least over a 680, because they will put you in the credit bucket. I've talked about that several times, and I'll link that video if you don't know what I'm talking about. So you want to make sure that you hold off on the big league cards. Capital One is a big league card. Excuse me, because they have some really stellar cards like the Venture X and all those type of things. Once you get out of the secured and the bad credit part of it, that's why I say don't even get in that bucket with them. Start building your credit with the credit union. You want to start with them, and then once you get that credit score up and you're over 680, you don't have any collections. Your late fees or late payments, I meant to say, are in the past. Either they got deleted or you've moved away from the event where it's no longer affecting your credit score as heavy. So we want to do those things, right? So we want to make sure that the big league cards, that we hold off on them, so that when we do apply for those cards, we get the best rate. We get the best card. We get approved, no problem. Okay. And they're not starting us off with a little funky $300. Okay. That's why you want to wait. That's why. Because you want to get more than the funky $300 with Capital One, because this is a big bank that just did the thing with Discover, right? We talked about that on the channel. So these people got plenty of money to give you, but not if you look risky, and not if you're not ready for it. So we gotta do things in steps. We gotta do things in steps. We gotta build our credit in steps, right? Okay. So those are the big league cards. You want to go to Capital One when you're ready for Capital One. You want to go to American Express when you're ready for American Express credit card. Okay, we got to do these things in order and in steps. All right. Let me make sure I got my notes. Let's see. Okay. So main takeaway from this is, if you are building or rebuilding your credit, okay, let me get back to the full screen. So if you are building or rebuilding your credit, I want you to give yourself time. Credit takes time to build. Credit needs accounts to age. They need the accounts to age. There's a such thing in the credit score pie called length of credit history, and it counts for 15% of your overall credit score, which equals up to like 87.5 points. I broke this down in another video. This equals up to like 87.5 points. The length of credit history. How long have you had credit? So the longer you let accounts ages, especially revolving accounts like credit cards, personal lines of credit, overdraft lines of credit, those type of things where you can use, pay it back, and still have the credit line, those things you can have forever and ever, as long as that financial institution that you have it with still offers that particular product. So you want to use those in a way where you will always have that on your credit, because the longer you have it, the stronger your credit score is. And that's how you start getting to the 800s and the 700 club, because you want to let those accounts mature with good credit history, not maxing out the cards, not going over the limit with the credit cards. Like if you got a $300 limit, your high limit on your credit profile should not say 377 or something like that. Because that means that at some point you went over the limit. And then not only did you go over the limit, but you even let it go as far as reporting on your statement to the credit bureaus. That's not good. So you want to give yourself time to build credit. Let me put it in another way, just to give you a visual. It takes 6 months with FICO for them to establish a score. 6 months. They need to see what your credit habit is. They need to see how you maneuver. And if you don't have any past experience, then they have to go by what you have. So at least 6 months for FICO to get you in their algorithm to see what you look like in your current credit worthy state. So you want to make sure that you look good when it comes to that, right? So give yourself time. Credit takes time to build. Credit needs accounts to age. Credit needs that type of care. Because what you're doing, you're laying a foundation. So with that being said, you also want to not have a lot of inquiries. Inquiries can get you turned down because you look risky. You look like you need money, so you're going everywhere trying to get approved. And then if your credit is not good, especially if you're just starting out with no credit because you're new, or if you're rebuilding your credit, you don't want to just go around applying for everything and racking up the inquiries. That's why I say quality over quantity. Okay. So you want to make sure that you're starting with a financial institution that has a secured credit card option or a secured loan option, preferably a credit union, and you want to do your business with them. And if they turn you down for a secured card, that means you're not ready. That means you got to do some more steps. So say if you are building your credit for the first time and they turn you down for a secured card, well, that means that you may not have established a relationship with that credit union. And all credit unions want a relationship with you, not just Navy Fed. You know, we talk about a Navy Fed wants a relationship. They got the internal score, blah, blah, blah. That's how most credit unions are. Trust me, I worked at it for 10 years. So most credit unions want you to treat them like they are your one and only. So that means you got to have direct deposit coming into there. I'm not saying put your whole check in there if you got another bank. Like say you bank with Chase too or something, and you can divide it. You can divide it up. But you want to make sure that you are using them. You got to show them that you can handle an account. So having money going in checking, having some money going into a savings. If you do not have $500 right now to start a secure card, then you need to be saving up $500 in your savings account with that credit union until you get there. We are in February right now, so some of you all are going to be getting some tax returns. This might be the opportunity for you to get a pretty decent limit on a credit card. Or if you're not at that door, let's think about paying off some collections, some pay for deletes, settlements, whatever we can do to clean up this credit report so that you can get to the secure option door looking as stellar as possible, right? So we're not looking risky, so that we can really get the bag, so that we can really get on the path. Some of you all are on the path of getting your first car or getting a better car with a better interest rate. Some of you may be on the path of wanting to buy a home. When you are getting terrible cards with Credit One Bank, Premier, Kickstarter stuff, these Chime crap, are they going to be the one that's going to give you a car loan? Are they going to be the one to give you a mortgage? No, that's the reason why I say you start with a financial institution, because those are the ones that can actually do those things. You're wasting your time with this other crap. So that's the reason why you want to start with them. That's why, okay? So give your credit time. Quality over quantity. Keep that in your mind. Quality credit over the quantity of credit. You can have 15 daggone accounts on there. If they trash, your credit score is going to be trash. Certain credit products look better and give you a better foundation with your score when those accounts age. It really matters. You don't even want to get fined like finance companies. Those look bad on your credit. You only want to have financial institution credit products on your credit report. Okay? That's it. That's it. Legit. I'm not talking about a fintech app. Chime is a fintech app. They're not the actual bank. I think their bank is a Bank Corp or something like that. I'm talking about the real bank here. I'm not talking about a go-between and third party. We're not talking about that. I'm talking about either a branch that you can actually walk into and you can see the tellers and you can wave and smile and all that good stuff, or either they may not be in your particular town, but you know that they are a financial institution. Like me, I don't live close to a Navy Federal branch. The nearest Navy Federal branch to my home is like an hour and a half away. So I can't go to one just easily, right? So therefore, I don't have all my money from my direct deposit at my job going all into that account. I have a local bank too. I have a local bank that I bank with, that I use them as my primary, and I have my Navy Federal where I use them. I have some money going over there. I have my flagship card over there. I have some savings that I'm building up over there. And I also have an Easy Start certificate that I put $50 in every 2 weeks when I get paid. That's a 13-month certificate. So I'm using their products. So when the first time I got my flagship card back in 2024, they gave me a $20,000 limit. That card now is sitting at $51,000. What is my balance on that card right now? $24, because I just spent $24 at Lowe's the other day to get a kit for the toilet. That's all I got on that card, and I will pay it right back off. So when I use that card, I'm using, and I go get groceries or whatever I'm doing on that card, I pay it right back off. And I got plenty of room on that card. I still will not charge more than I can afford to pay back at one time, because it's easy to get swipe happy. It's real easy to get swipe happy, right? So guys, I want you to just think about these things that I talked about with you all. If you want to graduate this secured card, if you got approved, these are the things that you want to do. You want to make sure that you don't look risky with any other lender, keeping your credit utilization low. Make sure that you're paying your payments on time. If you got to put them on auto pay to pay the minimum, you just got to do that, because you don't want to be, right? You also want to make sure that you are building a relationship with the credit union. Make sure that you're putting some money in there, saving some money in there, doing all the things that makes them feel like they're the only one. Okay, using your debit card, all the things, okay? None of the negatives. We don't want any overdrawn accounts. We don't want you using oops and none of that other stuff, okay? It's all about looking good on paper and not looking risky, okay? Lower your inquiries. While you're in the building or rebuilding phase, stop applying for credit. You're probably going to get turned down, especially if your credit is not even established, or your credit is under 600, or if it's not 680. You're not going to get good credit products at this junction. Give your credit time. Your credit needs time to build. Rome wasn't built in a day, and neither is your credit, okay? Credit needs time to age, all right? So make sure I did cover everything. No inquiries, no overdrawn accounts. Pay off those buy now, pay laters if they are reporting to your credit report. And even if they're not, if they coming out of your account at Navy Federal, if they're coming out of the account wherever you're trying to do business, wherever you're trying to do the secure card, you don't need that flowing through your checking account. You need to pay those things off, because it makes you look like you're broke, okay? It makes you look like you're living above your means, because you are borrowing against your future earnings, okay? They don't look good. All right. So I think that's all. That's all. So I just want to make sure that you guys know that there is a road to recovery, but that road is going to take time. And if you're building credit for your first time, that road is going to also take time. Okay. So be patient with yourself. Give yourself some grace, give yourself some love, and know that your journey will bear fruit if you stay on the right path. Thank you guys for tuning in to today's Credit Clarity Tuesday. If you really enjoyed this video, please, please, please give this video a like. Let me know what you think about it in the comments. And also, guys, scan the QR code so you can join my Credit Ready community. All right. Link right there on the this QR code is on the screen, and the link is always in the description of the videos. I really do appreciate it. And if you can hype this video up, give me a hype it up for me. I do appreciate it. Much love. Peace.